Welcome to my tutorial on how to read stock quotes. If you're new to the stock market and you want to start investing, then you've come to the right place. It can be tough to look at a stock and know what you should care about if you don't know what any of the numbers you're seeing actually mean. So in this video, I'll make analyzing stocks easier for you by going through all of the important beginner level metrics for buy and hold stock investing with a real life example stock quote. If you find this video helpful, don't forget to toss it a like and subscribe to my channel for more videos like this one. So what you're looking at on your screen here is a stock quote on Yahoo Finance. And you can use whatever platform you'd like. Most will show you a lot of the same information. I just like Yahoo Finance because the interface is pretty simple and it's not crowded with a bunch of opinion-based metrics and articles like a lot of other platforms are. Now, in Yahoo Finance, you can search for any publicly traded company's stock by just searching the name or the ticker symbol at the top here. I already have Home Depot pulled up though, so we can just go ahead and take a look. Now, before we actually go into the stock, I do want to flag this top bar here that you see on your screen with a bunch of charts representing the S&P, the Dow, the NASDAQ, etc. Now, these are known as indexes, and these are important because they can give you a sense of how the broader market is doing. I personally like to look at these before looking at any individual stock because you can't really tell how good or bad a company is doing without really understanding how the markets as a whole are doing. Now, for US companies, the most commonly used index is the S&P 500, which is up here. If you see red for the S&P 500, then it means that the market went down that day. Whereas if you see green, then it means the market went up and did well. So pay attention to this before you look at any stocks, since it can help you understand if a stock is actually doing good or bad, or if it's just moving along with the rest of the market. Now, moving on to the actual stock for the Home Depot Inc., ticker symbol HD. Now we see here that the price for a single share of Home Depot stock is $288.61. The number to the right of that tells us how much the stock price changed since the previous market close. So compared to the previous trading day, Home Depot stock price has gone down about 6 cents or 0.02%. One thing to note here is that we are looking at this stock while the market is closed. If the market was open and we looked at this quote during trading hours, these numbers would probably be changing every few seconds right before our eyes. But since it's after trading hours, we won't see this move at all. Now, just because the stock market is closed doesn't mean that no one is out there trading the stock. And that's what this little section over to the right here is. It tells us what the stock price currently is after trading hours and how much it has changed since the market's closed. If it's before trading hours, then you might see this referred to as pre-market trading. Either way though, whether it's pre-market trading or after hours trading, the amount of shares being bought and sold after trading hours is much lower when the stock market is closed compared to when it's open. Moving down a bit, we have the stock summary, and this is the price of the stock when the market closed on the previous trading day. So when the markets closed yesterday, the stock price for Home Depot was $288.67. So if we take the stock price it closed at today and subtract the change here, we would get the previous close. Now, next up, we have the open, which is the price that the stock was at when the markets opened on the most recent trading day. The stock market is open on weekdays from 9:30 a.m. to 4 p.m. Eastern. And so this is saying that the stock price was $287.25 when the market opened at 9:30 a.m. this morning. Now moving down to the next two rows, we have the bid and the ask. And since this is a tutorial for beginners, we won't spend too much time here since honestly these aren't that important. But if you're curious, in the simplest terms, the bid is how much people are willing to pay for the stock, and the ask is how much people are willing to sell the stock for. Again, not that important, and this is more of an intermediate concept. So next up, we have the day's range, and this is the low and the high point for the stock price for the most recent trading day. Looking at this, we can see that today, while the stock market was open, the stock fluctuated between a low of $284.30 and a high of $289.77. And this can be useful because it can give us a sense of how people have felt about the stock today. If there's a wider range than usual, then it could mean that something happened that impacted the company today. And you should probably check either the charts or the news to see if anything did happen. Similarly, right below that, we have the 52-week range. And this is the low and high point for the stock over the past 52 weeks. Now, this can give us a sense of how this stock's price has fluctuated over the past year. And if you compare where the current stock price is at relative to this range, you can get a sense of if the stock is currently at a high point or a low point compared to recent trends. So you can see here that with Home Depot being at $288.61, it's kind of in the middle of this range, more towards the lower end of the 52-week range, meaning that the stock price is on the lower side compared to what it has been over the past year. Moving on, these next two rows here are super important. First, we have the volume, and then we also have here the average volume. Volume will tell us how many shares have traded over the most recent trading day, and average volume is how much volume trades per day for the stock on average. So for Home Depot, we can see here that we have over 2.6 million shares that have traded today, compared to an average of about 3.9 million shares. Volume can tell us a lot about a stock. If you see that the volume of a stock is significantly higher than the average volume, then it probably means that something happened that caused a lot of people to either buy or sell the stock. So it probably means that you should check the news to see if anything happened to cause that. Based on Home Depot's volume, though, for the day, compared to its average, it's a bit below average, which probably just means that nothing special happened today with Home Depot that would have made people want to buy or sell the stock. Now, the other thing volume is good for is helping you know what stocks to avoid. If you see a stock that has low volume, like, say, under 5,000 shares or something like that, that's probably a red flag. That means that not a lot of people are buying or selling the stock, and that could mean that if you did buy the stock and then wanted to sell later, you'd probably have trouble doing so. The technical term for this is liquidity. If a stock is easy to sell, then it's more liquid, but if it's hard to sell, then it's less liquid. You typically want to avoid stocks that aren't liquid, but for most companies you've heard of, this won't be a problem. You typically only see low volume for stocks like penny stocks, for example, which you should honestly just avoid altogether. But you can see here that Home Depot stock is in the millions, so if you needed to sell it, it would be really easy to do because there are millions of trades happening a day. Now, underneath volume here, we have this fair value row. And honestly, you should just ignore this row. This is just Yahoo's projection based on algorithms that you honestly should just not trust. Now, moving on to the next column, though, we have another very important metric, which is market cap, which is short for market capitalization. For Home Depot, we see that it has a market cap of 298.633B, or about $298 billion. This metric is really important because it represents the true market value of the company, and thus it allows us to understand the relative size of the company compared to other companies. A lot of people think that because a company has a high share price, it means that the company is more valuable, but that only accounts for part of the equation. The problem with share price is that it doesn't account for the number of shares of the stock that exist in the market. The market cap is the price of a single share of stock multiplied by the number of shares that are in the market. That explains why a company like Apple, which is the biggest company in the world, valued at about $2.6 trillion, has a lower share price than Home Depot, which has almost double the share price, but is a much smaller company. Now, moving down to this next row here, we have the beta of the stock. And this is actually a pretty advanced metric, so don't worry about this too much. But in case you're curious, this represents the volatility of the stock relative to the average stock in the market. So if a stock's beta is above 1, then it means that the stock price fluctuates more than the average stock. We see here that Home Depot's beta is a little bit less than 1, which means that the price fluctuates less than the average stock. Again, this metric is pretty advanced, so don't worry about it. It's not that important for long-term buy and hold investing. Now, moving on, next up we have the PE ratio, which stands for the price to earnings ratio. Now, I consider this more of an intermediate level metric, but since I hear this talked about so often, I'll touch on this quickly. The PE ratio is meant to measure how much the market values a company relative to how much that company makes in profit. So it's calculated by taking the stock price and dividing it by the earnings per share, also known as the EPS, which you see right down here below. Earnings per share is basically the company's earnings divided by the number of shares they have in the market. In other words, you can think of EPS as how much of the company's earnings you're entitled to for each share of a company's stock that you own. Now, going back to PE ratio, you'll see this term thrown around a lot when you read or hear about stocks on the internet. But in reality, this ratio doesn't really mean much unless you're comparing it to other companies that are in similar lines of business. Like me saying that the Home Depot's PE ratio is 17.29 means nothing by itself. But if I say this knowing that Home Depot's competitor Lowe's has a PE ratio of 19.5, then it tells me that Home Depot stock is less expensive than Lowe's relative to how much it makes in profit. Now, there might be reasons why this is, so it's important to do your research to understand either if Lowe's should be more expensive than Home Depot or if the market's just undervaluing Home Depot. But PE ratio can be useful for comparing how expensive a stock is relative to other companies like it. Moving on, next we have the earnings date, which is the date that the company is expected to release their next earnings report. Now, this date is pretty important because it's basically the next time the company will give us a status update on how the company did over the past quarter. All public companies in the United States are required to report their earnings on a quarterly basis, and stock investors look forward to these reports because they give us a lot of information from the company's management team that wasn't publicly available before. So because of this, on earnings day, you'll see a lot more volume in the stock's trading activity than average since investors are trading on the new information. Moving on down, we have forward dividend and yield. And this is edging on an intermediate metric, but it is an important concept to understand. Now, when a company makes a profit, they can either choose to reinvest the profits into the company, or they can pay the profits out to shareholders in the form of a dividend. The forward dividend you'll see here is representative of how much the company expects to pay out in dividends over the next year for each share a shareholder owns. And the yield here is just the percentage of the dividend relative to the current stock price. So if I owned one share of Home Depot, then I would expect to earn about $8.36 in dividends over the next year while I held the stock. The yield will let me easily calculate this based on the value of my investment in the stock. Like, for example, if I owned $100 worth of Home Depot stock, I would expect to earn about 2.9% of that in dividends over the next year, or $2.90. Now, like I said before, companies can also choose to reinvest their profits into the company, so not all companies will have a dividend. You typically see this with younger companies and companies that are more focused on growth, since they would rather use their profits to fund faster growth and increase the value of the company instead of paying those profits out to shareholders. Next up, we have the ex-dividend date, and you should just think of this as the date you need to own the company's stock by in order to be eligible for the company's next dividend payout, which usually happens quarterly with some exceptions. Now, the last row we have is the 1-year target estimate, which honestly, I would just also recommend ignoring. Now, this number is not fact-based like all the other metrics that we've gone through so far. Rather, it's based on an average of the opinions of experts. But this average is only taken from a group of experts that Yahoo or whatever source you use has access to. So you definitely want to take these with a grain of salt and do your own research from sources that you trust to form your own opinion about the stock before deciding whether or not to invest. Now, moving on over to the right side of the screen, we have a chart that shows how the stock price has moved over different time frames. Starts you out at 1 day, but we have some monthly charts here. We have this YTD, that means year to date, and this will show you the performance since the new year began. We also have a couple yearly charts and then a max chart, which shows the stock's performance since the company went public back in 1984. Now, it helps to take a longer term view and look at the stock price movement over longer time horizons just to get a better picture of how certain events have impacted the stock price. Like, for example, I see on the bottom, it shows the relative volume that was traded. And I can see here around this time frame, a lot of stocks were traded relative to normal times. Now, looking at this stock chart, this happened around March 2020. So I'd probably want to know about what happened in March 2020 to see if something happened to Home Depot that caused a lot of trades to happen and the stock price to move down. Now, As we know, March 2020 is about when the COVID-19 lockdown started in the US, and so we'd probably see a similar story in many other US stocks around that time. Moving on, if we scroll down a little bit, we can see the news articles associated with the company we're looking at. For investors, news is so important when it comes to understanding stocks. Stocks are not just numbers, they represent ownership in a company. So it's really important to understand the story behind the company so the numbers you are looking at actually have some meaning. And as I've been saying throughout this, news can tell you so much about why a stock price moves the way it does, and it can also help you infer whether or not a stock's price should have moved the way it did. So pay attention to this for any stock you consider investing in, and if you do invest in a stock, it could be a good idea to sign up for news alerts on that company so you know what's going on. Now, we've only gone over the summary tab so far since this is a beginner tutorial and a lot of the other tabs are more intermediate level and also a lot less important for long-term investors. But that being said, there are some tabs in here that you should at least know about, and I'll go over those. But if you're interested in a more in-depth video on stuff in this stock quote that I have not gone over, let me know in the comments. So going into the first tab, you should care about and actually have it up here. It's the profile tab. The tab has some more information about the company, like the sector, the industry, as well as the number of employees. But honestly, what's really key here is the executive section down here. A company's leadership team is extremely important. Great management can make even an average company outperform. So if you're looking at a stock and you're thinking about buying, take a look at the management team and see what their experience looks like. Understand how much or how little experience they have in leadership positions at similar companies, as well as their past successes and failures. Understanding the experience of the management team, particularly the CEO and the CFO, can tell you a lot about the direction that company is probably heading in the future. The other tab you should know about is the financials tab, which you see here. This is a summary of the company's financial statements, including the income statement, the balance sheet, and the cash flow statement. Now, I personally like to look at this data directly from the company's public filings, and I could make a video on how to do that if you're interested. Just let me know in the comments, but I'll go over it in here real quick. Starting with the income statement. The income statement is where a company reports its revenues, expenses, and profits over a given time period. It is important to know that different metrics here will be more or less important depending on the company's line of business. But for most companies, including a company like Home Depot, what I'd care about on the income statement is the total revenue and the net income. The total revenue is the amount of money that the company made in sales, and you obviously want to see this number going up over time. The net income is the amount of profit the company earned after accounting for all expenses. And you honestly also want to see this number going up over time. That being said, though, for some companies that are either still growing and less mature, or honestly are just doing bad, you might see this number negative, which means that the company is losing money. Now, moving on to the balance sheet, this is where you can see a snapshot of the company's assets, liabilities, and equity interests at a point in time. And this isn't that important to beginners, but it is nice to see how much debt and working capital a company has. Working capital measures how much money the company has available to meet their short-term obligations, but this is a more of an intermediate concept, so I won't spend that much time here. The last tab here is the cash flow statement, which summarizes how much money has moved in and out of the company. This is another intermediate concept though, and it's honestly probably less important for beginner long-term buy and hold investors, but I just wanted to mention this so that you at least know what it is. So I hope this was helpful. I left chapters in the video to make it easy for you to go back and rewatch anything so that you can make sure you have these concepts down. And if you have any questions, let me know in the comments and I'll get back to you as soon as I can. And with that, thanks so much for watching. If you enjoyed this video, don't forget to smash that like button and smash that subscribe button to see more videos like this one.